Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Excuse me. Good afternoon, folks. Welcome to the April 7th, the terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but much, much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there too. Let those fingers do the walking. That means go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question and in our Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 710 points, a little over 3% to the upside. S&P up 73, 2.75%. NDX 100, 161 points to the upside. That's 2%. That's the weakest percentage-wise move to the upside today in the indices. The semis are up nearly 3%. The Russell 2.75%. New York Stock Exchange over 3% out there. Spot volatility index, we talked about that during the 1 p.m. update. Dangerous as we speak right now because it still continues to trade above its 50-day exponential moving average. We'll briefly go touch on that a little bit later in the show. Gold's off $6, $16.87. Hasn't busted any levels of support that I know of. But what it also hasn't done is bust through resistance. It went up, it took a look, it tried to get over it, and then it said, adios, amigos. Be careful if you are long gold. Today and yesterday's activity should have the hair on the back of your neck standing up. You've got light sweet crude trading out at $25.79. Natural gas having a nice move up 11 pennies right now, trading at $1.84. Treasury bonds, the 30-year is back 2 full points and 2.5 points basically as we speak right now. Lead the charge dollar-wise to the upside. You've got Booking Holdings up 81 bucks, Tesla 43, AutoZone 44, CoStar Group up 28, Amazon 28. To the downside, it is Ring Central off 15 bucks. Dexcom is down 10, Teladoc Health off 9, Zoom Video down about 8 buckaroonies. So the first question that came in from Jay in the Tiger's Den wanted to take a look at our TAS market profiles. Now, Jay, we're going to do two different things out here. With regard to our TAS market profiles, if we just take a look at this, I just got my daily profiles and a couple of different automated trend lines that are on it out here. So, and because of the recent change, because of the recent move going from the into the June contract out here, I really believe for the profiles we're better off using Stevie's synthetic version. Now you got the ES trade at 27.23. If we move over here, good, we're still at 27.23. That, to me, the most important profile, Jay, that is on here is the one on the very upper right-hand corner, and that is the weekly profile. It's a profile that formed above price. And 27.79.75 is a level that we should be watching. That should be a key level of resistance. If this is just a counter trend rally, that is one of, which I believe that it is, that is one of the price points that you and I have to watch like a hawk. Now, the ES mini on its weekly time frame is going to look much different than the NQ out here. That's why we're going to really pay attention to the ES. In the NQ, which is what I've got up on my screen right now, you'll see that it also formed a weekly profile, but this is more of the normal type. Normal type, what's that mean, Steve-O? Normal because the bottom of the box, price was inside the profile. And the bottom of that box is 72.52, and price is trading right now right at the center of that box out there. And this could also be a level of resistance. That area is 81.88. We're trading at 82.13 right now. But I believe that it won't be the NQ that controls if this is where that counter trend rally ends. It doesn't have to be today, but I would really be on the lookout over the next couple of days, folks. Now, Jay, just to finish that off for you, we'll come over and take a look at Stevie's synthetic contract out here for the Dow, upper right-hand portion on the weekly time frame. Again, that I believe is the most important level for us to be watching. That level is 23.740. So the profiles are going to look different on Stevie's synthetic version, but that's simply because I've got all of this additional historical data that provides us with these numbers. It's not that either are wrong. Each of them are where buyers or sellers are sitting. But right now, we want to watch that 23.740 level in the Dow Equity Futures contract, YM, and in the ES Mini, we want to watch that 27.79. If there is some kind of test and rejection, and on a short-term time frame chart, we see some kind of topping patterns out there, that could be the extent of the move. And that's really what the spot volatility index is signaling to you and I at this moment in time, 112 in the afternoon, because it is trading above its 50-day exponential moving average, which currently is priced at 43.38. We're trading at 44.62. And the reason for that is all you have to do is take a look at what Stevie will like to call his generally speaking chart out here. It shows you in the upper portions, the S&P 500. Those areas that are in yellow are when the spot volatility index is above the 50-day exponential moving average. And when you take a look at those boxes that are in green, those are when the spot volatility index is under the 50-day exponential moving average. The hair on the back of every person, every trader's neck should be standing up. Do not get caught up into the A to B equals CD patterns that each of us draw out here. I can draw them too. They're just price projection tools. It's like having flow here at TFNN, but they don't always complete. They don't always complete out there. So let's watch those resistance levels that are on those weekly time frame charts for the ES and the NQ. We've got a caller on the line, I see. Let's go out to Brent in Martinez, California. Brent, thanks for holding. Thanks for calling. How are you today?
Oh, doing quite well, Steve. How about yourself?
Doing well also, thank you. And natural gas is what I believe you've called about. So tell us what you're doing and how I can help you.
Oh, I'm actually on my phone and I don't have the computer in front of me, but it seems to me that we went down to a couple tests of, I think it was around $1.51 on the contract.
Yes.
And we've come off of that a ways, and just want to get your thoughts on, of course, resistance levels and then support, that type of thing, if you could.
Yeah. So what natural gas did today, folks. So this is the exact opposite of what you and I just looked at on the weekly time frame charts for the ES and NQ. A brand new market profile formed today on the daily time frame, and it is below price. So this is the bullish message here, and we're about to go to break, Brent. But when we come back, we'll finish taking a look at it. It would appear to me that the next resistance level inside of natural gas is going to be $1.89, and that is the bottom of its weekly profile. This is Steve Rhodes with TFNN. Stick with us, folks. We'll be back in just a few.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're on the line with Brent in Martinez, California. We're taking a look at the May natural gas contract out here, which by the way, what did I do with the chart? I think it must be buried. Give me a second. Here it is. So if we take a look at the May contract here for natural gas, it formed a really great, a perfect actual three drive to a bottom pattern out here. And that was confirmed a couple of days ago when this little bullish engulfing candle formed, folks, and then the price closed above Stevie's red line. And so it's got a very valid bottoming pattern. So now what we're doing is looking for resistance levels. Well, we had that, give me a second here, I'll put the charts back up on the screen. And Brent, so we had that new profile that formed, as I say today, and because price is above that, the top of the box is 173, this suggests, well, okay, where's the next level of resistance? So on this set of charts, the next level of resistance would be the bottom of that weekly profile, 1.889. That's resistance. I'm not saying that price is necessarily going to stop there, but it should find some, you should see some selling in that area. The question would be, okay, if price can get above that, where are the next levels of resistance? I think at this stage here, you still have to look at the weekly market profiles. So, Brent, they go from 1.889 to the center, which would be 1.964. To the top, which would be 2.078. And the reason that I'm using just the weekly profiles is because when I take a look at the daily time frame chart as an example here, to look for any other resistance levels, I don't really have anything other than getting back to those prior highs in the 2 area, which basically is the top of that weekly profile. I mean, if price, this could be a very significant bottom. It's certainly a bottom, that 3 drive to a top pattern, but way above that is $2.37. So we don't have to worry about really paying attention to 237. I think what we have to do is look for those resistance levels, which right now the only thing I can come up with is on the weekly time frame. Does that make sense?
Oh, that does it, absolutely, Steve. It's you've identified several of them, and again, I'll have to go back in the archive and take a look at it, but you definitely pointed out some that I need to be watching.
Perfect. But everything looks pretty good. Nice solid bottom. Natural gas responding way better than light sweet crude. So anything else that I can help you with?
I think that's it. I hope all's well with you and your family, and just you take care, and I much appreciate your help.
Absolutely. Thank you for calling as well, and we'll look forward to speaking to you again soon. That was Brent in Martinez, California. So we had a request to take a look at the market profiles. The second our second request that came in, this was from Carlos. And Carlos says, hi, Steve. Question on the S&P in today's high. Is today's high the 0.786 retracement of the lows? I'll be listening to the show. So, Carlos, the answer there is no, but let's go ahead and pull up the S&P 500 and see exactly what we can find out here. Now, let me just, I've got this chart populated. What I'm going to do is turn a few things off, and we can always turn them back on again. Let's turn off the A to B equals CD pattern. Let's turn off these trend lines out here. Let's turn off that. So I think the question you're asking, if I understand you correctly, you're asking, is today's high the 0.786 retracement off of the lows, or of the lows? So the reason that I said no is we're really just slightly above the 0.382 retracement. Now, I'm using for my swing points from high to low. This is where you may be using something different, Carlos. So I want to fully explain what it is I'm looking at. And I'm looking at the swing point high from the trading day of February 19th. And that's where the S&P had a high of 33.93.52, all the way down to the low at 21.91.86. So the first retracement level is 0.382, which price closed above just slightly yesterday, having some follow through today. Your typical Fibonacci technical analysis would say if you get above the 0.382 level, you go to the next area, which is the 0.618 area. I realize a number of people use a 50% retracement level. Not Leonardo da Fibonacci, not da Fibonacci DiCaprio, not Leonardo. 50% is not a Fibonacci summation sequence number. Doesn't mean you can't use it. I'm just saying, you asked me about a Fibonacci retracement. So 29.34. Now, that would be the first area. You could have chosen as your swing points. You could have chosen, perhaps you've chosen, just trying to get this to turn off. There we go. You could have perhaps chosen the high of March 3rd down to the same low, so the low is going to be the same. But in this case here, you can see that price is really approaching the 0.618 retracement level at the 27.75 area. So let's go ahead and put both those Fibonacci retracements out there. Just to answer your question, no, today is not the 0.786. At least with regard to any swing point levels that I would use out there. So I hope that that helps you out. Now, as we repopulate the chart out here, I did have this A to B equals CD pattern that was drawn in. And I believe when the S&P 500 passed its B point yesterday, it was on similar or lighter volume out there. And so let's say maybe we have an A to B equals CD to the upside. That could take us into the 28.97 level. That would be the one-to-one. Could take us to about 3,019. But what's going to get in the way before that? Well, during the prior segment, or two segments before that, with Jay, we were looking at that ES Mini, and we're looking at the bottom of its weekly profile out there. So that's one spot that we could find an actual top or an end to this counter trend rally. Where's another spot that we could be looking? Well, I started playing around with the charts before I came on the air, looking for some trend lines, some other trend line out here. What is it that could stop the S&P 500 or any of the indices from completing those little A to B equals CD patterns? The one that I just showed you on my screen out here. And so one of those levels was certainly that ES Mini weekly time frame. I don't remember the number. But now, if we take a look at this trend line here, and I may be off just by a tad or what have you. That's fine out here. But here is what I see as trend channel lines approximately inside the S&P 500, and I'll be watching to see what happens as price gets up to those levels. Now, I actually was doing this on a different set of tools and charts out here. They look like this. So now what you've got is you now have what Stevie has listed here as the trend channel lines for the Dow in the upper left, the S&P in the upper right, the NDX 100 in the lower left, and the Russell 2000, which is just miserable out here in the lower right. It's not even, and what I've done here for these trend channels is I've, in essence, used the exact same starting points. The exact same starting points out here, the exact same swing points, just to keep things uniform. So what you and I will be doing as price continues to maybe grind its way higher over the next day or so is watch to see if these trend channel lines get taken out, because they could be the end of this rally. Now is the absolute time to be tightening up any stops that you have if you are long the indices out here. Again, I can go draw all these A to B equals CD patterns. All you have to do is really just come back and take a look at the index ETFs and take a look at yesterday as price passed the swing point. Inside the SPY, the number was 194 million shares. What did it do yesterday? 188. It's not a confirmed A to B equals CD up inside the S&P 500 or inside the SPY. Not even close. Well, maybe close, but it is no cigar, that's for sure. If we take a look at the NDX 100, it had volume of, the Dow Diamonds, 16 million shares. And when price pushed through it yesterday, it was 10 million shares. Today, you're at 7. You still don't have the volume out there. Inside the NASDAQ 100 or inside the Qs, it did have volume of 62, and it was passed with 64 million shares. That is not exactly enthusiastic, expanding volume passing the B point. Let's not get too caught up in the ABCs, because we could flunk the class. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we had somebody in the den. I forget who. My apology, but I know the request was to go take a look at Microsoft. So let's go take a look at Microsoft out here. Here's our 3 time frame charts for Microsoft. So we've got the daily, we have the weekly, and we have the monthly. And what we know about Microsoft is it's sitting basically right at resistance out here. So when I say basically at resistance, if we take a look at the weekly time frame chart, now this is a bearish structured profile out here, and the top of that weekly profile is 167.43. So it's bearish in structure because the way these profiles work, the top of the profile is where the snipers are. That's where sellers are. The bottom of the profile is where the buyers are. The center line is where we have both buyers and sellers within that range, within this free range, so to speak. Now, because there's buyers and sellers there, we don't know. We'll just call it equally distributed amongst them. So you've got sellers that are sitting closer to the top of the profile than the bottom. That's why Stevie refers to it as a bearish structured profile out here. So prices tested that so far this week. It's rejected it. So in essence, what we've got with regard to Microsoft, it's up at resistance. If we take a look at the monthly time frame, its resistance level is 166.73. We're at 166.89 and change out there. So guess what? It's at resistance. That doesn't mean that price can't go higher. The top of the bullish structure daily profile is 172.50. So that is where some resistance. So what would really need to take place in order for Microsoft to get its mojo out here is price would need to close above the top of its daily profile, something we haven't seen since, in essence, the all-time highs. Last time we saw Microsoft above its profile out here was back on February 19th. So where Microsoft is at resistance. Now, that's based on resistance of the TAS market profiles. If we take a look at the daily time frame chart out here, just looking if there's any other patterns or something that we should be paying attention to, I don't have anything out here on the daily time frame chart to suggest that Microsoft has formed some type of top. So no type of topping pattern out there. But resistance is resistance. If we take a look at the weekly time frame chart, well, in the weekly time frame chart, price is trading up into Stevie's green line. It's slightly above it. My green line's about 165.79 is what it looks like. Out there right now, we're trading 166. So it's at an area of resistance, counter trend resistance. And on the monthly time frame looks really pretty solid. Now, there was a top out here. That top was the Rhodes momentum indicator top. It had a dark cloud cover and a key reversal candle on a monthly basis. But really, Microsoft has held up pretty well. You've got to admit, it has held up really, really well out there. So the only thing that I've got for whoever had requested me to take a look at Microsoft in the den, and I apologize, my den window is relatively small, so I can see all of my other screens out here, is the only real topping pattern we've got are just sellers, just resistance out here. So watch those profile levels. If you're long Microsoft, I would really be tightening up the stop. Now, the average daily true range is $9.21. And so that really says that any stop that you have should be at least $9.21 below at least today's close or where it's trading right now, because it's just normal movement, $9 over the last 10 trading sessions out there. If $9 or even a Fibonacci expansion of that, like 1.272 or 1.618, is too large of a risk, and it doesn't make the reward risk, because the reward right now, when you and I take a look at Microsoft, is some kind of punch up to the 172.50 level. The 172.50 level. All right. So it may not be worth the reward risk out here as we take a look at Microsoft. When Microsoft passed a swing point yesterday, just curious what volume, you had 77 million shares on March 31st. Yesterday was 67 million shares. So really, Microsoft, one of the better stocks. It doesn't have any kind of confirmed A to B equals C to the upside. It's running right into resistance. In fact, thank you for asking me about Microsoft, because what this chart does for both you and I, one of the best stocks out there, couldn't even take out its swing point with volume out here. That's got to make you say, something to think about. And we know that these resistance levels are really important, which is why we're watching the weekly ES and the weekly Dow equity futures contract. John in the den is asking me to elaborate on my comment about gold. John, it gets really back to this very simple thing here with regard to gold. And that is going to be, where did I put it? Where are my, must be further back here. Give me 1 second to pull up. Here we go. So we're going to look at our horizontal trading ranges, primary trading ranges for gold. And this is it. Now, this has just got the weeklies up here. I could put the monthlies up on the horizontal trading ranges. It's a weekly time frame chart. What you can see is 1695.40, which is a weekly horizontal trading range. In essence, it was tested back here on the week of March 9th. It was tested the week of March 23rd, and it's been tested this week. So that's the upper range out here. The price has been unable to bust through. And we know that the lower part of the range is really in the 1493 area. It's actually a little bit lower than that. Let me turn on my monthly horizontal trading range numbers out here. So let's put those up on the screen. Let's go ahead and turn off the weekly, John, so you can take a look at it. And look at where the spike high from yesterday or this morning, look at where it ran into resistance, 1740. Gold likely pulling back to 1601, and I would say 1462 is definitely game. We've got some callers on the line, so let's go to our first caller. I don't know who it is, so would you introduce yourself, please? Hello? Do we have a caller? I don't know who it is. I apologize. Maybe in the den you could, in the production room, let me know. Okay, one dropped. Anybody else out there? We'd go to our second caller. I think we had 3 callers on the line, so my apology for that. Who do we have? Who are we speaking to? Yeah, there, Jim. Just Jim from Palm Harbor? Okay, I don't have Jim. Well, let's do this here. Why don't in the production room, why don't you guys figure out who's on the line or not, and we'll go from there. But so, John, back here to gold. That weekly. So let me turn the weekly. Let me turn the monthly out. So you can't bust them up, and then the spike runs right into the monthly horizontal trading range resistance level out here. Now, with regard to Goldilocks, let me see here what we've got going on. Give me a second to try to populate the short-term time frame chart out here, a 30-minute time frame chart, because what we want to look for, we want to understand is where is support? Where is the breakout support on a 30-minute time frame? So we can watch that to see if price has pulled back to that level. So I'm going to go ahead and let that populate out there. At the same time, if we go take a look at Goldilocks out here. So here you can see gold priced in dollars, euros, pounds, yen. We can see it's all pulling back. So that's why we want to take a look at the 30-minute time frame chart and see has gold begun breaking through levels of support. Well, voila. Here is our answer. So when we take a look at the spike high from late last night is what it looks like out here. It made a Rhodes momentum indicator top. And now we've got price trading below 1687.40. In a bull market on a 30-minute time frame chart, that should have held as support. And guess what? It hasn't. 1662 is next up on the pullback. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go to our first caller out here, Robert in Kansas. Robert, thanks for calling. Thanks for calling back. Much appreciated. I know you want to take a look at the TLT, so tell me how I can assist you.
I was just looking at the TLT in terms of taking a short position for the intermediate term, and I wanted to get your thoughts.
So what I wouldn't do is take it right this very second, and here's the reason why. It's because on the 30-minute time frame chart, just about a half an hour ago, and about an hour before that, you've got your second hammer candle that is formed on a 30-minute time frame, where it's confirming a Rhodes momentum indicator bottom. Now, price needs to get above its profile levels, but if you were going to take a short, I wouldn't do it now, and I'd wait to see what happens on a bounce up to the 180.09 level. Now, I can't guarantee that price is going to get up there. That is where on a 30-minute time frame where price had most recently broken down. If price gets up there and turns back down, then I can get it, I see it, I understand. On a daily time frame, on a bigger picture, now it's looking at not the TLT, but of course looking at the underlying instrument. The other factor that you really have to consider out here, you really have to give this some major consideration, is what's going on around the globe. Now, here are T-bonds priced in U.S. dollars, euros, yen, and pounds. T-bonds have made new all-time highs in terms of euros, yen, and pound sterling. We haven't done that here in U.S. dollars. I will tell you that the way that instruments make their highs, all-time highs, which is what a lot of people are calling for here, doesn't happen when it makes an all-time, when it makes it in the other currencies and not U.S. dollars. Was I clear there, Robert?
Yes.
Okay.
You're saying keep my powder dry.
I'm saying go back and study the charts. Go back and study the charts of the Dow priced in pounds, yen, euros out here, and the U.S. dollar index. Go take a look at these main instruments, major instruments, the Dow. Take a look at gold. Take a look at treasuries out there. And look, you can always find an example. But by and large, for the most part, the way that treasuries or big, large instruments make their major tops is not when they've topped out in the other currencies before the U.S. dollar. It's just not the way that the pattern works. And when we take a look at bonds at this stage here, there's not been a swing point that's been broken yet to the downside. So, and I will throw out this other caveat out there. We're not even done really with the liquidation crisis. All we've done is phase one, part one out here, which has been the coronavirus. There's going to be a whole nother major wave, economic wave, that's going to be the scare out here. And in Europe right now, where they are scared blankless, you can fill in the blank out there. What they've been doing is they're running for dollars. There's like a shortage of U.S. dollars that are out there. And so I know that people are thinking, I get people that email me all the time out there telling me that interest rates are going to rise and bonds have topped. And I'm saying, boy, I don't really, I understand your theory, but there's a difference. My dad taught me the difference between theory and reality. Now, I can't tell you that joke here right now, but many of you have heard that. And so I just want you to understand the reality is we are the king, the U.S. dollar index. And if you want to get to dollars, U.S. dollars real quickly, there's really two easy ways to do it. Either buy our stock market or go ahead and buy U.S. Treasury bonds. So I just think you just got to be careful. I think trading it is a different thing than what you said, Robert, which was an intermediate term position out there. So that's what I see. That's the fundamental aspect. And then the technical aspect by taking a look at how these treasuries are trading in the other currencies. Okay?
All right. Well, thank you. I appreciate it.
Okay, you bet. You bet. We've got another caller. I think that the next caller is going to be Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you?
I'm good. I'm sorry about the call dropping a little bit ago.
No problem at all. So I know you want to look at Amazon and tell us what you're doing and how I can help you.
Well, I only have 2 shares of it. I bought it at 1906.79, and I was hoping to get it up to about 2066, but I don't think it's going to get there. It looks like there's a lot of resistance at 2027. 57 or so, and I'm just wondering if you thought in the short term it might make it back up to, the 2035 area where there was the high today, I believe it was.
So you're right about resistance. So what Amazon is doing is trade it into the gap, or trying to trade into the gap. And that was the gap to the downside on February 24th with volume of 6.5 million shares. You're up today in towards that area with much lighter volume, 3.4 million shares so far. So it doesn't appear it's going to do, it doesn't appear you're moving into that gap with volume out here. So 2039.30, and it's just that gap. That's really the only level of resistance we can find. Price is above the top of its profile, weekly profile, top of its monthly profile, top of its daily profile. But you're absolutely right. It is running into clear resistance out here, that gap to the downside. Let me put my other chart up on the screen for us, Jim, see if we can see anything else. As soon as I can get this thing to expand out. And let me get this thing populated. I don't. You happen to be in wave number 4. That's letter D. Basil, has got an expression there. Something else can happen when you get to that 4th level. So maybe that's the case for Amazon. 2033.19 is a real resistance area. That's a TD9 breakdown level. You're at 2021 right now when I take a look at the weekly time frame chart. And the monthly time frame chart, Stevie's green line, which was at 2027 out here. So I think you've got this nailed. You're really up at resistance. And the only way is to either exit now or put some kind of stop in there. The average true range on a daily basis is $71. So you're not going to like that. That's for sure. But you're up towards resistance. And this could go either way at this stage of the game because price is above. You're up at gap down resistance, but you're up above TAS market profile resistance.
Okay.
How else can I help? How else can I help you there with? I don't want to confuse you.
No, I understood. That's very good. It's very difficult when you get you're trying to look at retrace levels and resistance and these different moving averages and everything, trying to figure out. I knew I was at resistance earlier, like at noon there, yes. And I just thought, well, shucks, maybe I should have got out, or maybe I should stay in. And it's hard to say. I don't necessarily want to put a stop because in the after hours it can really go right through a stop, and then the next day you're way down below the stop.
Yeah, I think with the qualm in your mind, so to speak, I think all you need to do right now is do the reward risk. And we can tell you the risk. The average true range over the last 10 days inside of Microsoft is $71. So that's your risk, at least to the downside, $71. And you're up at resistance. And just figure out the reward risk to see if it's worthwhile to stay with the transaction, to stay with the trade.
Okay, I appreciate you.
You bet. Thanks so much for calling back. That was Jim in Palm Harbor. When we get back from this break, I believe we got one more caller on the line. We'll go straight to John in Orlando and take a look at STXS when we get back from this break.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Let's go out to Orlando and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Oh, good. How are you, Steve?
Very good. Thank you.
I have a question on SPXS.
Yes, go right ahead.
There's a gap on the 24th of February at 1270. Well, I got in today. What do you think about that?
You're looking at a gap on when?
24th of February at 1270.
24th of February. You know, I don't have on the 24th of February, I don't have a gap. Where I do have a gap, though, and this is the one that really you and I should be talking about. Are you talking SP or ST? T like Tom?
SP like people. XS.
You're looking at the S&P 500. Okay. Sorry, I had the wrong thing up there, and so that didn't help. Okay. So the gap. So what your question about the gap is, will it get there?
No, I bought in today at the gap.
Got it. Okay.
At 12. Yeah. Mm-hmm.
Yeah. You know, because these are the triples out here and the way that they trade, you really, my recommendation would be to use the SPY if you're going to trade the doubles or the triples out there, because they may not contain the same gap out there. So is now the time to take that short trade? Here's my recommendation is to rewatch. This is my best at this stage of the game out here is, well, if you can see us on Tiger TV, as soon as I can get this thing up, where's the trends? Here we go. Is I would watch this trend line in the S. You may be early by a couple of days. And really in the S&P, you're in the upper right-hand corner chart out here. The actual price that I'm looking for the S&P to get up to, say tomorrow, the number would be about 28.28. The next day, it's about 28.05 or so. That's what I'm looking at. I want to see some levels of resistance fail. Okay, John?
What about risk reward? Risk reward, what do you think?
I think it could be a couple of days early.
Okay. All right.
That's what I think. And we're about to go to hard break and the show's over. But thanks so much for calling back and being put on hold. And if you need anything else, just send me an email, okay?